Hi, my YouTube subscribers. Hi, my fellow students. This is Teacher Papi. This is Teacher Party. I said Teacher Papi. Oh my Lord. No, I am Teacher Party. In this instead, I want us to just look into the definitions, examples of these accounting concepts, assets, expenses, and liabilities. Do subscribe, do share the video, do invite your friends to look into this and also your study buddies to look into this. It is very helpful. Let's start with the definition of assets. In the video before, where we were just doing the debit and the credit, I said I'll do the examples of assets, liabilities, and expenses so that you understand them far much better rather than spotting them and saying stationery is definitely an asset. It's definitely, an expense because teacher said it's an expense. You must know why. Okay, so the definition of an asset, so we're using the IAS framework, which is the official framework that we use as accountants together with IFRS. So an asset is a resource controlled by the entity as a result of past events and from which future economic benefits are expected to flow into the entity. So the important words here is resource control, past events, future economic benefits. So you can have a car. I usually explain this to all my students. You can have a car, but if that car is purchased under operational lease, then operational lease is just pure rent with no intention to own. So it might be because we classify cars as assets, but in the very nature of the contract, it is not an asset. It is an expense because it is just the costs that are incurred in the normal operations. You don't own it, you don't control it. Some dealership owns or controls it. So it's important to know the control and and the purchase transaction that occurred, the nature of the legal contract that occurred in acquiring that asset. If the contract was buying to own or was a vehicle financed with the intention to own, then after a certain period, this you can call it your asset. Moving from a liability cluster to an asset. So characteristics of an asset's ownership. The business must own and control the assets. So if the business, let's say the business is a bakery and they've got equipment that they use to bake bread, donuts, or cakes, but that equipment was also um, acquired through an operational lease, the bakery cannot call that assets because they don't own that machinery. They are renting machinery. Same as the trucks they use to deliver bread. If those they acquired using the operational lease, they don't own that. But if they purchase those cash or they went into some form of finance to help them acquire that with the intention to own after a certain period of time, then yes, immediately we can say those are assets if it's cash at the date where the last payment is made and the rights of ownership are transferred to the bakery. Then we will call those assets, we will call those items assets. So it is important to know the ownership. It's like I always make a practical example for my students and say, if you are renting a flat, it's not, you don't own it. You have a lease contract to rent it for 2 years. You don't own it. If the geyser bursts, you call the landlord because you don't own it. So if you own the flat, you paid for it in full, you paid the bond in full, or you bought it cash, then you become the landlord. It is the asset, you control it. Why? You've got the title deed, and the title deed is written in your name. And there is a transaction that was entered into to purchase that flat, and you're using it to generate rental income. So in the very essence of the word, that qualifies to be an asset if you purchase the property. But if you're renting it, it is not an asset. It is an expense. Economic value, assets must have an economic value. Resources, an asset must be used to generate future economic benefits or positive cash inflows. So we've got two types of assets, current and non-current. So the current ones, they are easily convertible to cash within a financial year. The non-current one, they take more than one financial year to convert into liquid securities. So the first example is your bank account. debtors, short-term fixed deposits, inventory, cash flow, petty cash, short-term investments, tax refundable, software. And the software, okay, I'd like to expand on this. Okay, tax refundable, if VAT is due to the company, it is a current asset. If tax is due to the company, it is a current asset. Software, I must reiterate this. Software, as soon as the computers are purchased and everything, some companies don't even recognize software as an asset. They just write it off as an expense. So it depends on the company policy. In your exams, if they do not tell you specifically if it's an expense or what, just classify as an asset. But if you classify it as an expense, just state the reasons why you're classifying it as an expense. Non-current assets, so it's your business buildings, your land. That's if you own them. If you are renting the building, you'll be amazed. Most beautiful companies will be like, oh my God, they own the building. They are on 100-year leases. They don't own the buildings. There's some financial transaction behind the buildings. It's like, oh my Lord, I thought they owned it. Okay, so the land, the buildings, computers, equipment, furniture and fittings, long-term investments, those are your non-current assets. So we are done, ladies and gentlemen. Here are my contact details. I disable comments because I don't, what is it? I'm a teacher full-time, so I usually don't get time to respond to comments timelessly. So that's why I disable them. But if you need to get in contact with this awesome and amazing teacher called Party, here's my email address and here's my cell phone number. And my channel is Accounting with Teacher Party. So please share the word, guys. Share with your friends. Education is not a privilege, it's a must. So let's make it as accessible as possible. Goodbye.